Good morning, folks, and welcome back to Almus Market Mornings. Diplomacy is happening through Twitter. President Trump has constantly been setting examples for that, while the day before he wrote about India stopping its Russian oil purchase in the near future. Yesterday, he spoke to President Putin, and the two seem to be restarting talks after a moment of frustration. From the market's point of view, we are once again seeing the dollar weaken, but there is an important development coming through, which is the stress in the US regional banks. Some banks say there is a fraud that has happened on loans given to funds that invested in distressed assets, and that's sort of causing a risk off scenario. This kind of headline is becoming common. There were two bankruptcies in some mid-size subprime lenders as well. Essentially, the reason to bring this point is to highlight that stresses in the banking sector is important to keep in mind and can sort of drive sentiment. Good morning, JK. I have two questions for you. Where do you see the rupee heading, and where do you see the gold and silver heading? Because it's the talk of the town.
Good morning, Swaraj. Rupee has sustained its gains below 88 at least for two sessions, and that is a telling point on how the market was positioned and how the sentiment was on the extreme negative side. That said, uh, the Indian official statement on Trump's claim that India will be stopping Russian oil import is kind of neutral. And there is no commitment or statement that says that they would be stopping. India says that they have a diversified sourcing for its energies and will go by what is in its best interest. They have not said they are stopping. They have not said they are continuing. And they're also saying that they will be expanding more energy imports from the US. It has been happening. It will happen more. So that's something that we cannot, conclude anything from. At least it's not so bullish for the fact that penal tariff will be removed. Interestingly, even Putin responded that our cooperation in energy with India is very much in tune. So that what you read whatever you want to read, but that's what it is. All said, think considering that market had not been selling much of dollars recently, even if it was at 88.80, and despite RBI's constant presence at that level, it was only when they sold a reported amount of $5 billion on Tuesday, or rather the Wednesday morning, that there was a move on the currency below 88. Now going forward, I think it will be news flow driven. Some sort of a risk off sentiment is seen in the markets. It could pass off as it has been passing off late, because market tends to ignore nowadays all this news. And then, of course, on the positive side, we have Indian market chugging towards its all-time high. Not too far from it, maybe a couple of percentage points. And then, of course, FI flows have been neutral now. There's no outflow that is seen. That said, I'm irrespective of all the news, I am looking at the technical part. I see a very strong support at 87.50. And exceeding can of course see 87, but I think 87 to 87.50 is going to provide a very strong support for the dollar. And also considering, unless we have a very good trade deal, I think India needs to see the rupee trade slightly in a weaker range, and it cannot it cannot have a continued strength, at least for the time being, unless we see a structural change which improves our trade numbers. So that is my view on the rupee. Yes, in the short term, if we do see 88.20, exporters can hedge some of their near-term receivables. But 1 year forward, I think I would still probably wait for some time to get the clarity on the news also. On the gold and silver, now you see there has been structural rethinking or a paradigm shift on these precious metals, because for long it has been considered as a small part of the reserves that the central banks hold. And the moves in these precious metals were cyclical. based on how the US interest rates moved or how the inflation was moving. But this time around, we have seen these metals move irrespective of anything, whether US rates are higher or lower, yields, whether the inflation is higher or lower. It has been seen that we have seen an unbridled rally in these commodities. And one of the major shift has been the central banks increasing their holding of these precious metals in their reserves. Now, we have reported in the past also that central banks holdings of gold has now exceeded their holdings in the US treasuries. That's a very clear point, how much gold is in demand from central banks. And then as they become more consistent, the demand has also increased from the investors. The ETF investments and direct buying of gold by large investors has also increased. And suddenly market also finds that the physical supply is in shortage. Also, everything is working. Now, traditional watchers of the market would say that it's a vertical rise and it's bound to come off. But I think the situation is also quite different from what we have seen in the historical times. So I think even a pullback it cannot be predicted right now. Market still seems to be hungry for gold and silver, and that's likely to continue. As in when we have a pullback, it can be sharp and and it can also be short-lived. So that is what one should think about. And trend is definitely a super trend as of now. So no two words about that. On the US side, yes, there was some negative news on some of the banks, regional banks, who had observed fraudulent transactions involving heavy losses. And the important thing is the major institutions like the banks in the US who have lent to these regional banks, and what is their position so far. Those banks have said that they are not much affected by the positions of these regional banks, and therefore although stocks did react negatively, and the bonds also got bought as a safe haven after this news. It does look like this possibly is not going to be a major turning point for the markets, but definitely we will keep an eye, because there's one more observation that major fund managers have now stopped, or rather cut back their exposure to riskier corporate debt, which had seen a huge rally in the recent years. Now the spreads are so narrow that they see a risk of holding these assets. Now going back to gold when stocks are overvalued and even the bonds are now seeing some risk. I think gold is another alternative where the funds are looking to park their money, and gold being, an illiquid, relatively illiquid asset. I think the prices are continuing to rise. The dollar, which had seen some promise of a better rally to go above 100 on the dollar index, has suddenly turned down. Now, what factors have been there is more safe haven buying of euro and yen has been seen, with some sort of a risk off sentiment that is seen in the recent session. The shutdown expected to last more than 40 days, according to some analysts, and we can have exponential impact on the economy as it drags more and more. The Beach Book survey, which is the regional Fed surveys on the US economy, showed that there is decelerating economic activity across regions. Couple of days back, Powell also hinted at ending the quantitative tightening program, in order to shore up the liquidity in the system. And of course, there was also a political news from France, where the PM has survived two confidence motions. And budget seems to be seeing a passage with some modifications. Pension reforms have been withdrawn, and it's replaced by a 2% tax on the super rich in France. So that's another point. And not to forget also that in Japan, the Takachi's reduced chances of becoming PM, meaning that those trades of yen selling yen and buying other assets have also got reversed in a very short period of time. US-China trade, renewed trade frictions are also playing its part for keeping the dollar on the on the ropes. Chinese fixing has been consistently below 7.10 now for the last 3 days. So that's also keeping the Asian currencies somewhat stronger. No doubt, the geopolitical development, what you hinted at about Trump and Putin talking, meeting scheduled with Zelensky, I think today in White House, and later a date and venue to be decided for Trump and Putin to also meet and talk. I'm not so optimistic about these because the territorial claims between Ukraine and Russia are too much, contradicting, or rather, I would say it conflicts each other's interests. Therefore, to find a middle path on this is going to be very, very difficult. But I mean, we have to see the developments, how the market wants to see an end to this, but including the global economy. But then I think it's a wait and watch situation.
Thank you, JK. And lot of things happening, different stories being played out. On one side, we are having this sort of turbulence in the regional banks. Um, though large banks still appear to be in good position, I recall what Jamie Dimon had said a few days back that cockroaches can be found everywhere, and slowly as some things come out, maybe there is something more that may come out. We don't know yet. As JK also mentioned, the large banks, they are in their statements, they are saying that they are in a good position. So even though these subprime lenders and the regional banks are under stress, it does not seem to be something which is cascading into something bigger as of now. Interestingly, the spreads between the riskier debt and the risk-free debt is very narrow, and that's of course dissuading people from sort of buying the riskier debt, and that's another important thing because the spreads have become so narrow. Dollar index has stalled during its rally. Yen and euro have been bought. There is no sort of update or end, a near end to the government shutdown till now. Even the Beige Book survey is showing the decelerating economic activity in the US. So, and JK, if I'm not wrong, what I've been reading is that some have sort of started betting that Fed may actually cut bigger this year. Though Fed Watch still shows that 25 basis point in October and December, but there are some bets being made that you may have one larger cut because of this shutdown. What do you think on that?
I mean, I won't rule it out. Yes, as I said, if shutdown prolongs, there can be an exponential impact on the economy. No, as of now, assessment is that every week it is shut.
Hmm.
There's a 15 billion loss in the output for the US economy.
Right.
Yesterday, Stephen Miran also made a statement that this year, in two meetings itself, he expects as much as three rate cuts or 75 basis points of cut. Market is
Hmm.
still discounting two and three next year. But yes, if shutdown is a big thing, it can get larger and larger as it prolongs. That's
Hmm.
one thing. And the stock market also, you don't know when it is going to see a sharp pull back.
Hmm.
One thing you can realize, a week back we had this Trump statement on 100% tariff to be imposed on China. The
Hmm.
fall that it had seen has not yet been fully retraced by the
Hmm.
market. So that also shows how the market is positioned, and we can have a serious pullback with any other fresh negative news, or if the shutdown moves towards 1 month or later.
Right, right. So I think these are things we need to keep an eye out for. For the rupee, JK mentioned two important levels: 87.5 as a support and 88.20 as a resistance for USD INR. So these are the levels to watch out for. That's it from us, Ray. Thank you for listening. We'll catch up on Monday with the fresh round of updates.